Hi guys and welcome. Earnings season is here, and this time it might actually decide where the market goes next. With all this noise about the bubbles, rate cuts and politics, the next few weeks could finally show what's real and what's just the hype. And in the previous video I talked about how important it is to follow the activity and results of the companies that we invest in, the businesses we actually own a part of. And right now it's the perfect moment to remind about that, because the earnings season has just started, literally this week. As usual, the first to report are the banks, and we'll also see results from big names like BlackRock and Johnson & Johnson and some others. And this week we'll hear from some AI and semiconductor companies too, like ASML and TSMC. Also, American Express will report, which usually gives a good picture of consumer sentiment, how people are spending and how confident they feel. Next week and the one after will be even busier. We'll get reports from many other sectors: AI, consumer goods, real economy companies, and of course some of the most famous names like Netflix, Coca-Cola, Amazon, and many others. So this is a very active time. And for us as investors, it's part of the job to follow earnings report, or at least summaries and reviews of those reports, especially from the companies we already hold and also from those that are on your watch list, the ones that might become part of your portfolio in the future. Why this is important right now? If you've been following the markets, you probably noticed what happened last Friday. A pretty sharp correction. The market has been going up almost non-stop since April this year. The S&P 500 has grown about 38% from the April lows to where we are today. That's a massive move. And now, more and more financial analysts are talking about overheating, saying that markets might be getting ahead of reality. And that's a lot of talk about AI bubbles and other warning signs. At the same time, what's interesting, many new investors are just joining the market right now because everything looks great, everything is going up, and they don't want to miss it out. But this is actually the moment to be extra careful. While experienced investors are preparing to lock in some profits and hold more cash, beginners are often going in the opposite, buying when everything is already near the top. And that's exactly why it's important to follow earning reports, to understand what's real and what's just the market hype. And honestly, I think there are a lot of overvalued companies right now, especially in areas like quantum computing, rare earth metals, and all that hype around nuclear energy for the AI future, etc. Many of those companies don't just lack profits, they barely have any real revenue yet, but are already trading at extremely high valuations. At some point, these valuations have to meet reality. And so after the earnings season, we might see some of them reveal their true value. And if there are any cracks in the economy, they could fall just as fast as they went up. And on top of that, there is a lot of happening in the US political arena as well. Right now, the government is shut down, and because of that, some key economic data like the CPI were delayed. They meant to be imported this week actually, and they are now expected at the end of the next week on October 24th, if it's gonna happen. And these are exactly the key indicators the Federal Reserve relies on when making decisions about interest rates. So now there is even more uncertainty. Will they continue cutting rates, keep them unchanged, or maybe even surprise the market with a different move? That's why the shutdown isn't just a political story, it actually matters for the whole market, because it delays the data that shapes monetary policy. If the shutdown continues, it could create even more uncertainty and drama for the whole market. We have this mix: a potentially overheated market, political tension, uncertainty about the data, and talks about new tariffs coming from Trump's side again. It's no surprise that investors are nervous, and that's why the earnings season becomes extremely important right now. It's the real indicator of what's actually happening in the economy. Are companies really making money, or is it just promises and hype? How confident are consumers? We'll get some answers from banks and fintech companies like PayPal, SoFi, American Express as well, and also from consumer giants like McDonald's, Walmart, Amazon, and others. And by looking at this report, we'll understand what this third quarter really looked like and what companies expect for the next one, whether they adjust their focus or stay confident. And only then we can judge, is the market truly overheated, or are these fears just a noise? Should we, as investors, worry about the businesses we own, or stay calm and keep watching? So guys, I want to remind you, follow the earnings dates of the companies you own, go to their official websites, check the investor relations section, then financial reports or quarterly reports, and look at the presentations they publish. Obviously read them. If you don't want to read all that by yourself, no issue. There are plenty of people on YouTube who review company results and market updates in video formats. Or you can even ask your AI assistant for a quick summary. But in any case, make sure you hear and see what the businesses themselves are saying. Imagine their top management speaking directly to you. That's the best way to stay informed and not to get distracted by all the noise about markets being overheated or undervalued. That's it for today. As always, let me remind you to hit the like button and to subscribe to my channel if you didn't do so. Thanks for watching.